be assisting you guys in preparation for your Principles of Accounts CSEC examinations. Today, we will be attempting the May-June 2025 Paper 2. Alright guys, so let's jump into it. See what question 1 is asking us for. Now question 1 says, Bihari prepared the following statement of account for a credit customer. Complete the statement of account by inserting the missing balances. So let's check out the statement of account. Now coming down, we're going to look to see where our missing balances are. Alright, so we're seeing date, reference, invoice, settlement balance. August 1st, you have a balance brought down value of 520. And August 9th, the customer, which is Timor's, would have now purchased items on credit, hence an invoice. Therefore, our missing balance for point number 1 would have been to simply add on. Yes, guys, add on that 340 to 520. Answer should have been 860. Great. Right, let's move on to the next part. Now, on the 13th, a credit note was issued. Credit note simply is when the customer returned goods to Timor's. Therefore, we need to deduct that $24. So after we subtract the $24, we should get a value of 836. Nicely done. On August the 24th, the customer, which is Timor's, paid Bihari a check for $660. Therefore, we're going to subtract 663 from the 836 to give us a total of 173. And finally, guys, a discount of $17. Discount allowed simply means Timor's received that discount from Bihari, and therefore Timor's will be owing Bihari less money. So 173 subtract your $17 discount, gonna give us a value of 156. Alright guys, so there we go. These are the answers for that first part of question 1. Alright, let's move down to number 2. Or part B, I should say. So part B for question 1, they gave us some details here. Opening balances was as follows: cash and bank overdraft. Transactions the month of August was as follows. We have our transactions listed from August 9th to 31st, and the question asks us to use the form provided on page 7 to prepare Bihari's 3-column cash book for the month of August. Balance the cash book and bring down the balances as of September 1st, 2024. Okay, no problem. Now let's scroll down. Let's see what the page 7 format looks like. So here we go. Usual format that you guys normally are accustomed to. Date, details, discount, cash bank. Date, details, discount, cash bank. Okay guys, let's jump into it immediately and let's fill out this cash book for a total of 10 marks. Now what I'm going to do, I'm going to actually split my screen. So you will be seeing my Excel worksheet answers right here and the questions to the side. In that way, I'll prevent scrolling up and down. Right, so let's go guys. So first we do have opening balances, cash 100. Great. Now I would also make sure and have the name Bihari at the top. Also include the heading 3-column cash book for the period ending August 2024. So there we go. So let's go. So on the 1st of August, there was an opening balance of cash $100. That's going to come right here on the debit side. Balance brought down. Now there was a bank overdraft of $81.50, and as you guys know, bank overdraft will carry a credit balance. Great, let's jump down to those transactions now. On August 9th, a check received in July for $642 from AD Supplies was dishonored by the bank. Well, as you guys know, this check was dishonored, means that the check was invalid. Therefore, we need to put that on the credit side of the cash book. Now, the reason why we put that on the credit side is because obviously your dishonored check meant that the customer would have paid us that money. We would have initially recorded it as money in on the debit side, but since the bank told us that the check was invalid, we now have to reverse it. So that's what's going to show up on the credit side. Now on the 18th, Bihari paid $64 by check for gas for his wife's motor vehicle. This is money coming out of the bank account. This is a personal expense, therefore we're going to treat this as drawings, credit side. On August 24th, received a check from Timors to settle her debt of $860 less 2.5% discount. Okay, great. So that is money coming in. Therefore, that's going to go on the debit side of our cash book, Timors. But remember, we are not receiving the entire 680. We are receiving 680 less 2.5% discount. That discount going to work up to be a value of $17. Therefore, the amount that we are receiving via check will be $660. Now, on the 27th, we did pay $4,000 by check. This included $3,600 for new office equipment and the balance repairs to an existing piece of office equipment. So, money being paid out. This happened on the 27th. So, let's put that here, guys. Now, remember, there's a two-part payment. We are paying out money to purchase new equipment, $3,600. We are also paying out money to repair existing equipment. Now remember, this is money coming out from our bank account, hence we have it as bank column. August 30th, cash sales amount to $4,224. Okay, money coming in via sales, debit side. Cash column, good. And then on the 31st, we deposited all the cash on hand into the business bank account except for $500. Alright guys, let's read that one more time. Deposit all the cash on hand, so all this cash right here would have gone into the business's bank account except for $500. Alright guys, so how much of this cash are we actually taking out to put in the business's bank account? Well, currently, the total cash that we have is $4,224 plus 100. Great, $4,324. And we are taking all of this except $500. So how much are we taking out? $3,824. Now that $3,824 is coming out from the cash account. So I'm going to put that as credit cash account $3,824. I remember that money is actually going into the business bank account. So I'm going to put it as a debit in the bank account immediately. Now I'm going to put my date and my description, guys. August 31st. That money is coming out of my cash but going into my bank account. There we go. Good. And well, that money that is coming into my bank is coming from my cash account. There we go. Right, and as you guys know, when you have an entry such as this one, it is referred to as a contra entry. Great job. Now, sometimes you just pay letter C next to the description, or you can simply write in the word contra. Great. Alright guys, so that is what our cash book looks like so far from August 9th to the 31st. Next up for us now is the balance and close it off. So let's do that. You guys know the balance of your account. You work with your large side, and then you're gonna subtract your large figure from your small figure, and then you'll be able to get your closing balance. Let's see what's happening here, guys. Let's work with your cash account first. On this side is 4,324. The other side, which is the smaller side, 3,824, and we know that we left $500 inside the cash account. Therefore, to make this side balance, we're going to include a 500 here. Balancing at 31st August, 500. So if we now add up both sides, and we should now get a value of 4,324 appearing on both sides. Great. Now let's do the same for the bank account balance, guys. Just by looking at it alone, we can actually tell that the credit side is the larger side. This side can total $12,676. The debit side is the smaller side, totaling $4,487. So guys, let's work with the large side. Add up this side here, the credit side, we're going to get $12,676. Great. Debit side has to be $12,676 as well. But the missing value to bring it up to $12,676 is going to be a total of $81.89. This represents our balance carried down figure for our bank account. The question did ask us to close it off, balance it off, and also bring down those balances. So we're going to get that done. Before we do that, we need to tally up our discount allowed column. That will be $17. Discount received column was 0. Great. Now balance carried out. Now cash account on the credit side will be a balance brought down on the cash account on the debit side at the next date, which is September 1st. Same situation with your bank account. Balance carried down on the debit side will be a balance brought down on the credit side. And the next date will be September 1st as well. And this is what our cash book would have looked like for this question. So guys, check it out. Make sure everybody understands that. Right, nice. Alright, so there we go. Got through. Now let's move on to part 2 in this B of question 1. Now part 2 said state one significance of the balance of the bank account at the end of the month. Now you guys just realized that we ended up with a balance brought down on the credit side, and everybody's supposed to know that the balance brought down on the credit side will be or what we know as an overdraft. Right guys, this is an overdraft. Overdraft simply means this is the amount of money that the business will be owing to the bank. Let's put that. Great job, nicely done. Alright, time to move on. Let's go down again. Now part C. TMOs learn through social media that there is a system that makes payments through electronic means. Recommend 2 electronic means that TMOs could use to pay for goods purchased from Bihari. So guys, remember Bihari is the seller, TMOs was the customer. And TMOs have learned about electronic ways to make payments. Well, let's put in those 2 ways. First way, he can do online bank transfers. Secondly, he can make electronic fund transfers or payments via credit or debit cards. Guys, got you there with that one as well, not a problem. Alright, time to move on to part D. Now part D, let's see what's going on here. Use the information from your statement of account on page 7 and the cash book on the statement of account on page 5 and the cash book on page 7 to prepare the account of TMOs in Bihari's books. Be sure to use the correct account titles and the details, also balance and rule the account at the end of the month. So this is TMOs debtors account in Bihari's books. They're telling us to go back to TMO's statement of account, put in these values in the T account, and even look at the transaction that happened here with TMO's, which is the August 24th transaction, and put that inside here as well. Alright guys, let's have a look at it. Let's see what it came out to be at the end for 5 marks. Let's do this as well. Alright guys, so I'm going to actually put in those balances now. So this is TMOs here at the side. Great. So TMOs owing 520 at the start, therefore debit balance. Good. TMOs on the 9th actually took a invoice, therefore they purchased more from Bihari, therefore debit. TMOs returned goods on the 13th and they got a credit note that will be reducing TMOs account $24. TMOs paid a check on the 24th, reducing the account. And TMOs did receive a discount as well. Here we go. Now, this is everything that happened with Timor's. The payment on the 24th of August, that was the amount that was showing up here as well in the cash book transactions. So that was it, guys. All we had to do now was simply balance up the account and we're done. So let's check it out. Large side. This side here going to give us 860 and you add up those values. This side here going to give us 704. Therefore, the debit side is the larger side, so we're going to work with those. 860 minus 704 going to give us a closing balance of 156, guys. This here is balance carried on. Add up both sides, total them up. And we should now be complete with our answer. There we go. And this was an entire question with 20 marks, question 1, June 2025. Alright guys, looks pretty awesome as you guys just saw. Great. So time for us to move on to question number 2. Let's jump into it immediately, guys, right? So there again, this is our answers for our cash book and Timor's debtor account. Great job. Alright guys, so question 2. Now question 2 is in fact a company's account question, as you guys are seeing. Right? Company account question. So let's go straight down. Let's see what is being asked of us. So Amazonia Company presented you with the following list of balances, which was extracted from the general ledger at the end of the financial year. So we have our balances at the end of the financial year. Trial balance, as you guys know, debit column, credit column. We have all the information is given to us. And we have some additional information as well. Auditors' fees were accrued, that means owing. Wages and salaries prepaid. Motor vehicles depreciated at a rate of 12% per annum based on straight line. Dividends proposed. Final dividends proposed by directors, which will be paid as follows. 3,000 to ordinary shareholders and preference shareholders be paid the outstanding dividend. Directors also proposed 7,000 to be transferred to the general reserve. Use the form provided below to prepare the income statement for Amazonia Company Limited for the financial year December 31st, 2004. Alright guys, so we have to now work up what the income for the company will be like. So we're going to prepare a normal income statement. The form has been provided. We have the name of the business at the top. We have the heading income statement for the end of December 2024. And now we're going to jump into it and get it done. This would have been worth 11 marks. Alright guys, let's get to it. Now if you look closely at the data given to the trial balance, we do have revenue, right, 198. So normally you start off your income statement with revenue. So let's start that up one time. Alright, so you can start up with revenue first. Get revenue is 198. Now next up, you're going to subtract your cost, which is the cost of goods sold, or cost of sales, which was given to us as 89,300. This will now give us our gross profit, guys. 108,700. Alright, great job so far. Next, we're going to add any additional income that we have. And if you look very closely, additional income coming into our business will be rental revenue. Nicely done. Looks pretty good. So that will be the first part of our income statement. Next up, we're going to subtract our expenses, guys. So we're going to have a look at all those expenses. We do have some adjustments to take into consideration. Let's get into it. Now, the first expense that I listed here would have been our debenture interest. Now, the debenture interest would be $200, as you guys are seeing up there. Good. Nicely done. Now, next up, we would have had our operational expenses. Let's see what those operational expenses would have been. Look at right below the debenture interest, 2,900. Let's check that out. Put it in. Great. Coming down below that, you will now have your auditor's fees. Auditor's fees 3,600, but you do have an adjustment for auditor's fees. Auditor's fees were accrued in the amount of $5,000. Let's put that in as well. Next done. Next up, we do have director's remuneration, and director's remuneration is your director's pay. Do we have any adjustments for those? I don't think so. So let's put it in one time. Now, all of these are the expenses that the company will be faced with. Next up, we have wages and salaries. I believe we did have a little adjustments for those. Wages and salaries were prepaid. Prepaid means out of the 20,100 that you are seeing up here, it means that that prepaid amount was for next year. So the amount for this year would simply be 18,100, but you had to subtract your 20,100 against your $2,000, and you've gotten that figure of 18,100. Alright guys, so make sure that you understand that prepayment part. Subtracting 20,100 from the amount prepaid, 2,000, to give us 18,001. Great. Now lastly, our final expense for Amazonia company would be our depreciation. Now we did get a note below that motor vehicles are to be depreciated at a rate of 12% per annum based on a straight line method. Alright, straight line method, let's work it out. Straight line method is simply the cost of 50,000, subtract the existing provision of 20,000 to give us a value of 3,000. Now that'll be net book value, but remember the straight line method, however, is simply where you're calculating the depreciation based on the cost of the machine. Right? So cost of the machine. So 12% by the cost of the motor vehicle would have been 50,000. Therefore, 12% by 50,000 will give us a depreciation of 6,000. If they had asked for the reducing balance method, then we would have taken the cost, subtracted from the existing provision, gotten the net book value, and then multiplied by the rate. But reading it back carefully, we saw that they asked for the straight line method, so it's simply the percentage multiplied by the cost. And there we go. Now looking back at the question, there weren't any other expenses to deal with. So this is it right here, guys. Alright, so let's put it up. Total expenses that was incurred for the business on our operational level, 80,800. So adjusted gross profit, subtract your total expenses, would have given us a nice net profit of 29,400. There we go, guys. Check it out. Right, this is it. Great job. And that was worth 11 marks, guys. 11 marks for that. Good. Now part B, we're going to move on to part B now. Part B simply asks for 9 marks that we put together the appropriation account for Amazonia company. Now you guys remember, with the appropriation account, we will be taking the net profit, add any retained earnings brought forward, and simply putting aside money from those profits for company use. So let's see what they would have been. Let's jump to Company Limited, appropriation account fee, and the December 2024. Start up with net profit per income statement. This was a net profit that we would have calculated based on the income statement that we just did. Put it in there, 29,004. Was there any retained earnings brought forward, guys? Let's go back up to our data. And retained earnings would have been 13,005. Let's add it on. Great job so far, guys. Looking really good. Now we're going to subtract our appropriations. Now, first of all, directors proposed 7,000 to be transferred to reserves down the bottom. Let's put that in as our first appropriation, because that's straightforward. Right, put it right down there. Good job. Now next up, we are seeing that proposed final dividends are to be paid. But as you guys have read through the question, you would have seen that interim dividends would have been paid as well. The interim dividends will have been paid out of the existing profit that the business earned. Let's record those interim dividends paid out. Good. Interim dividends means like during the course of the year, right? Now, at the end of the year, we are saying that the directors propose final dividends to be paid as follows. The final dividend being paid to shareholders, ordinary shareholders, would be 3,000. Great. And the directors propose that final dividends be paid out to the preference shareholders on the outstanding amount. Now, guys, you now have to look to see what was the outstanding amount that was owed to preference shareholders. Now, looking back, preference shareholders, the investment that they made was $10,000, and the return that they're getting back is 8%. 8% by 10,000 should be $800. But remember, they already have received a $500 as our interim dividend. So the amount outstanding to preference shareholders will simply be 800 subtract 500 to give us $300. There we go. Good job, guys. Nicely done. So let's add up all our appropriations. Gonna get a value now of 12,008. And finally, this will now give us retained earnings carried forward to be total of 30,100. There we go, guys. This was our appropriation account for a total of 9 marks. There we go, 9 marks. So this was question 2. Question 2 was the income statement for 11 marks and the appropriation account for 9 marks. Not bad at all, guys. Hope you guys understood that fully. Question 3, look at this, guys. Pretty interesting. Question 3 is asking us to take the data provided above in question 2. So questions be answered using data provided in trial balance extract on page 10, and your complete answer for question 2. So take your data from question 2 and prepare an extract of the company's statement of financial position, vertical format, to show the net assets for the company at 31st December 2024. Use the form provided below. Now, if you pay close attention and never ask the full balance sheet or full statement of financial position, it simply asks for an extract. Good, and the extract is show the net assets. So the net assets part is usually the top part of the balance sheet or the statement of financial position. So guys, we're going to have a look at that now. So again, we're going to have a label it up. I'm going to jump into it one time. Great. Alright, so first of all, we're going to have your fixed assets or your non-current assets, as you guys know. So here what, I'm going to scroll back up to the data that we have to use, and we will prepare the answer on the Excel spreadsheet right here at the side. Let's go, guys. Fixed assets. Fixed assets that the business has is your motor vehicles, definitely, as well as the premises, guys. Alright, let's find those premises. Premises. At cost, way down at the bottom. You see there? Way down at the bottom. So premises at cost, 175. Now, of course, there wasn't any depreciation of a premises, so depreciation 0, net book value is 175. Motor vehicle, the original cost of motor vehicle was 50,000. There we go. Depreciation towards motor vehicle. Remember, there was an existing depreciation of 20,000, plus we would have had worked out our depreciation from the income statement before as 6,000. So we need to put them together to get total depreciation, and that would have been a value of 26,000. Cost subtract depreciation to give us net book value. Use your calculator, you're going to get 24,000 here. Now finally, we're just going to add up these total costs and depreciation and your running column with your net book value to show it up in our statement of financial position. So there we go, guys. Now, after you total this up, next step for us is to move on to have a look at our current assets. So let's label it up, current assets. Current assets, as we know, stock, debtors, cash at bank, cash in hand. But remember, these questions may not have all those bits of data to work with. So let's see what we have to work with. After looking at this very carefully, we did not find any closing stock, but we do have our AR or accounts receivable. Let's see what our accounts receivable figure is. 18,006 down at the bottom. You guys are seeing that. So we're going to put it across here. We do also have cash at bank, but look at this, guys. Cash at bank is to the 100, but to the 100 is on the credit side of the trial balance. You guys know if you have a credit cash at bank, that means overdraft. So that will not fall as current assets, right? That's going to fall as a liability. Nice. But if other current asset that we do have is this prepaid wages that happened. Prepaid wages would have been 2,000. There we go, listed here. Alright guys, pretty good job so far. And that was basically current assets that we had. So we'll tally up, we got 20,600. Nice, done. Next up, we're going to list our current liabilities. Current liabilities are all amounts that we owe. Well, first, we're going to start off with that bank overdraft as what we already identified. Nice. Now, next up, usually we have accounts payable. Yes, we do. 20,800, as you guys are seeing it right there from your trial balance. List that as well. Then we do have accruals. Accruals means amount outstanding, and the auditor's fee would have been accrued 5,000. List that as well. Great. Now next up, remember we would have had proposed dividends, money being paid to those shareholders. Final proposal would be 3,000 to ordinary shareholders, and the preference shareholders, as we already identified from the appropriation account before, would have been $300. This will be the final amounts owing to shareholders. Alright guys, great. Those would have been our current liabilities. All we simply do now is to add them up to get a total. And our current assets subtract current liabilities will give us our net working capital. And this net working capital will now be added on to our fixed or non-current assets above. But in this case, you can realize that the current asset was 20,006 and the current liability is 32,200. This is going to be a negative 11,600. So 199 non-current subtract 11,600 going to give us net assets of the business as 187,400. And guys, this was the answer for that question, because all they asked us for was to prepare an extract of the balance sheet, which we just did. Good. And you know, they asked the net assets, and this was it. So this was your total for 20 marks. And I'm sure that you guys would appreciate this question because this wasn't too long, and they just simply asked for the extract to show net assets, which we did for 20 marks. So guys, great job at question 2. Nicely done. Alright guys, so this June 2025 paper is not looking too bad. So it's asking us about something called return on investment. So let's read it up. Let's put in the answers for these. So Simon is an entrepreneur who deposited $65,000 a 5-year investment plan with a financial investment company limited. At the maturity date, he is to receive the original amount invested together with the annual interest for each of the 5 years. Interest is calculated each year on the original amount deposited at the rate shown in the table below. We have the year, we have the interest rate payable. Let's do part A. Calculate the average annual percentage rate which is payable over the 5-year period on the investment. Alright guys, we can do that. So what we had to do was just to work on the average rate that would have been payable for the entire investment. How much marks that was worth? Well, that was worth just 3 marks. So that meant, you know, it should not have been too detailed at all. Alright guys, let's get the answer for that as well. Let's see how it went down. Now, all you had to get done in that situation was to add up your percentage rates. 250 plus 275 plus 3 plus 3.25 plus 3.40. And since this was covering 5 years, right, you simply have to divide by 5. So guys, let's put it in. And once you work that out, answer should have been 3%. That's it. That's it right there, guys. Add them up. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, divided by 5 years, got through 3%. Great. Time for us to move on to the next part. Easy 3 marks. Now, part B, calculate the dollar amount of the total interest earned by Simon on the investment at the end of the period. So, you want to see exactly how much interest was earned at the end of the period. All right, guys, let's do this. We can get this one done. Let's check it out. Now, I'll actually show you guys a table for it to see how it has worked out. So, I'll actually split my screen again. Good. So you actually see the data together with the answer. Right, so there's the data here, right? Let's do this. Alright guys, so check it out. This is our interest calculation right here. Year 1, the investment was $65,000. The rate payable is 2.5%. All you simply had to do was to multiply the investment by the rate payable. Go straight in your calculator. 65,000 multiplied by 2.5%, which is equivalent to 0.025. 1625, guys. There we go as your first answer. Next one. 65,000 multiplied by 0.0275. 1787.50. Third one. 65,000 multiplied by 0.03. 1950. Fourth one. 2112.50, and fifth one would have been 65,000 multiplied by 0.0350 to give us 2275. There we go. Right? Simply just add them up all together, and total interest earned would have been 9750. And guys, that was it. That's what they asked us for. Now, the amount of marks wasn't too much. It was just 4 marks, but that was some nice calculations to get those 4 marks. Alright, guys, a pretty good job with that question there. Alright, time for us to move on to the other part. Calculate total amount payable to Simon upon maturity of the investment. So basically, how much money will he be collecting when the investment matures? Guys, that's simple, because remember, he's going to be getting the interest earned of $97.50, plus you're going to get back the principal amount of the $65,000. So this is his payout right here, guys. Look at the answer. $65,000 plus the $97.50 going to give him $74,750. That was your answer for part C. Great. Now part D. Calculate Simon's ROI for the 5-year period. Show all workings clearly. Here we go, guys. ROI stands for return on investment, and the return on investment is simply the return divided by the investment multiplied by 100. The return is 9750. Remember, that was the interest that he's getting back. The investment was 65,000. 9750 divided by 65,000 by 100, gonna give 15%. That is the rate of investment for him. Nicely done. Now part E, explain to Simon the meaning of the ROI. Well, here we go. Have a look at the meaning right here, guys, right? The ROI of 15% means that Simon earned a total return of 15% on his original investment over the 5-year period. This represents the gain on his investment. That's it. ROI means that Simon earned a total return of 15% on his investment, right? Over the 5-year period. This represents the return on the investment, which is the percentage gain on the investment. Great job, guys. And that was just with 2 marks, but we got through pretty well. Now coming down below, we just had one more theoretical part to answer for 2 marks, and then we had to do a little calculation below again for a final 2 marks. Let's deal with it. So guys, due to current economic conditions, the industry average return on capital is 2% per annum, with all other factors remaining equal. State whether Simon made a good decision when he invested the $65,000 with the financial investment company. Use comparative figures to support your assessment. So the industry average meaning that what persons will get back is 2% per annum. That's what it said, right? But remember, we worked out his average, the investment that would give them in part A as 3% per annum. Look at right here. So he's getting back 3% per annum. 5 years, which means 5 years by 3% is 15%. The industry average is 2%, which is 5 years by 2%, which is 10%. So it means that he made a pretty good investment because he's getting back a 3% return, whereas his total return is 15%, whereas the industry average is 2%. His total return on the industry average would have been 10%. So he got back 15% relation to the industry average of 10%. Right, guys? So Sam made a good decision with his investment. The industry averages 2% per annum, which equals 10% every 5 years. Right? Remember, 2% by 5 going to give it 10%. His investment yielded 3% over 5 years, which totaled 15%. This was a better return that was generally available in the market. There we go, guys. And that was your answer for part F for this question. Great job so far. Looking good, guys. Nice. So now let's have a look at the final part, part G. Alright guys, this question had a ton load of parts, A to G, but it was nice and easy for us to get those answers. Alright, lastly guys, complete the extract of the projected cash flow statement showing below with the investments maturity payout amount to show Simon's total anticipated cash flow in year 5. This is a cash flow statement. Cash flow statement shows cash inflows versus cash outflows, but all you're asking us here is to show the cash inflows. So he has cash sales money coming in 80,000, receipts from customers 56,000, and the final cash flow that he would have had in year 5 is the investment payout, guys. Let's put it here. The investment payout. But the investment payout, as you guys remember, calculating that from part B above, was it? Part C? Yeah, part C. You go back to part C, you can see how much this payout would have been, and it would have been $74,750. Right, guys? That was the investment payout. So now, if we add those values together, the total inflows would have been 210,750, and that would have been his total inflows there, and that would have been your 2 marks, guys. 1 mark for putting in the investment payout, another mark for putting in your total inflows. There we go. Alright, so great job, guys. That would have been your answer for part G. Pretty awesome. Good, so we got through 4 questions so far, guys. So time for us to move on to number 5. Let's have a look at number 5. Let's check it out. Now, question 5 dealt with Jam Block Club, and this is a sports club. And as you guys remember from your studies, when you look at sports clubs and so on, they are normally classified as non-profit organizations. So, with that in mind, let's see if we can answer up this question. Now, list 3 sources of funds that may be available to Jam Block Club apart from member subscriptions. So where else can they get money from? That was a big question, guys, right? Where else do they get money from? Right, so let's see what the answer should be for this one. Now, you guys know that these non-profit organizations may collect money or income from donations. Spotted. As a first source of funds. Second source, they could get, have different events. They could have some events and have some sales and so on. So we call those things takings from events. Like a little bazaar and so on, where they would earn some sales. And then they may also get loans from members. Right, so these are 3 different ways that these non-profit organizations can in fact get money. Great job, guys, not bad. Alright, next up we're gonna have another part B to have a look at. Jam Block Club made expenditures listed in the table below. Complete the table below by inserting a check mark in the appropriate column to indicate whether each expenditure is capital or revenue. Now you guys remember, capital expenditure is when you are spending money to purchase fixed assets. Revenue expenditure is when you are spending money to cover your daily operational expenses. Alright guys, let's get into it one time. So purchase of office supplies, that will be your revenue because you're buying ink and stationery, paying for operational expenses. Both new customized accounting software, upgraded financial reporting, that's capital expenditure. Software will be an asset that you're going to have to use for a pretty long time. Paid MRC Limited for the installation of customized software. Okay, that will be your capital expenditure again because you're paying for the installation of it. Paid salaries of the staff, revenue, and paid for maintenance work on the grounds, revenue expenditure. Alright guys, there we go. Nicely done, not too bad. Now let's move on to the other part, part C. Now part C, Jam Block Club had the following receipts and payments during the period ended April 30th, 2025. Using the information provided in the table above, prepare the receipts and payments account for Jam Block Club for the year ended 30th April 2025. Balance the account and show the opening balances at May 1st, 2025. Alright guys, we can do that. That's going to be simple for us to get done. Now you guys know that the major financial report that this non-profit organization will have to prepare is a receipts and payment account. And receipts and payment account basically works like a cash account, which would actually show money coming in on the debit side and money going out on the credit side. Receipts on one side, payments the other. Alright, let's check it out guys. I bring up my Excel spreadsheet so we can view the data and the answer side by side. Alright, so bank overdraft first made. Well, you guys know exactly what a bank overdraft is. That's going to come on the credit side. Nice. Refreshment bar sales. Well, that's money coming in. Debit side. Subscriptions received. That is money coming into the business as well. Receipts. Competition fees received. Okay, that's money coming in again because we have a little competition and we are receiving those fees, 80,000. Refreshment bar purchases. When we are spending money, that's going to go as cash out. Good. Payments for competition prizes, money out. Again, nicely done. Donations received, money in, receipts. Rent and insurance payments, nicely done. And wages of shop assistant payments as well. Great. Alright guys, we have all of those listed. Finally, we just need to balance and close it all. Well, let's see which is the larger side, which is going to be the smaller side. The money coming in seems to be $370,200 after you add them up. Money going out would have been $383,600. Alright guys, so therefore we actually seem to be spending more money payments than what we are receiving. So we're gonna work with the larger side guys. Let's see large side here. 383,600, 383,600. Or balancing the figure to bring up the smaller side to the larger side gonna be a value of 13,004, and this would have been our closing balance. Carried on 13,400. Great job guys, check that out. Let's make sure everything is good there. So balance brought down would be that 13,400 as well. Alright, so this was how it would have worked out for Jam Block Club. So it's still in an overdraft position as you guys would have seen. Alright guys, that was with 8 marks, not bad. Alright, time for us to move on to the final part of this question, guys. Yeah, that's the final part, because the first couple parts would have been 5 marks, 3 marks up there, that's 8, then another 8 marks here, that's 16. And now we do have the final part to have a look at, which is a bit of a bank reconciliation. Let's have a look, right? But we didn't have to do anything too detailed. We just have to say what would have happened to the receipts and payments account and the bank statement account. Let's have a look. The accounts clerk at Jam Block Club analyzed the financial records to prepare a bank reconciliation statement. At the end of the month, the receipts and payments account and the bank statement records showed two different amounts recorded as overdrafts. In preparing for drawing up a bank reconciliation statement, complete the columns in the table below. Select the correct column to indicate whether the receipts and payments amount, overdraft amount, or the bank statement overdraft amount will be adjusted. So let's say which one is to be adjusted. Each case say whether it's going to be increased or decreased, and write in the amount needed to bring back the statement. Write the amount needed to bring the bank statement overdraft into agreement with the overdraft in the Jam Blocks Club receipts and payments account. Alright, just had to put whether it's going to increase or decrease and the amount. That's all. Alright, so simple. Alright, guys, let's go with the first one. Check deposited for 10,000 has not yet been cleared by the bank. Now, this was actually example given to us. So they're saying a check was deposited for 10,000. That meant we would have put that in the receipts and payments account, but the bank did not yet clear it. Therefore, it did not yet hit that bank statement. So we would have to subtract that 10,000. Right? Not yet been cleared by the bank, so therefore it's not in the bank statement. So subtract bank statement 10,000. Good. Let's look at the second one now. So check paid for the purchase of the accounting software had not yet been presented to the bank for payment. So therefore it meant that that check has not yet been sent to the bank. Therefore that is an unpresented check. Now that unpresented check has not yet been presented to the bank, therefore it means that we're going to have to add that back on to our bank statement because it did not yet come out from the bank. We add back your unpresented checks, guys, right? Good. Now, a check for 4,000 received last month from G. Kellaway customer was reportedly dishonored by the bank. So that check actually went to the bank. The bank said no, that was dishonored. Dishonored means that money did not go into our actual accounts. Therefore, we need to subtract it or take it back out from our receipts and payments accounts. So put a negative there, 4,000. Check paid to supplier Joggy Boy for 2765 had been entered in the books as 2567. So we actually understated the amount that we would have paid to Joggy Boy. It's supposed to be 2765. We record as 2567. The difference in those two values would be 2765 subtract 2567, 198. That meant our receipts and payments account would have been understated in terms of the expenses. So that difference of 198 must be subtracted from the receipts and payments account. As remember, it's supposed to be 2765, but we put that 2565, therefore we still have to subtract 198 from there. Now, some club members had deposited their subscription fees directly to the bank account. That money went straight to the bank account, but that did not hit our receipts and payment account just yet, so we need to put it back in our receipts and payments account. So there we go. Plus 11339. Alright guys, there we go. Alright, and that would have been our answer for that final part with 4 marks, therefore total marks of 20. Alright guys, so this now brings us to the end